You go. Watch what you say now.
Yeah, you're officially on. A grand total of five people will see this, so careful. Okay, so um, Joey Carter, why don't you go ahead and introduce yourself? I mean, really, it's great because Greg and you have not met, so why don't you introduce yourself, and then Greg will learn about you as well.
Yeah, cool. Greg, Mark and I met recently in the last couple of months. I guess we've been networking together at a networking group there in downtown Fort Worth. I'm in financial services, and so I help people to make money, save money, get out of debt, properly insure them for their families. And so I'm licensed in life insurance in several states, but here in Texas, and also investments. So yeah, that's me. I'm retired Army. I
Okay.
spent 21 years in the Army with 5 deployments. My first deployment was Mogadishu, Somalia during Black Hawk Down, and then after that, toward the end of that, I served in the National Guard, and I was with the federal government up until this last October. So I was with Department of Health and Human Services till this last October, and that's when I went full time into my financial services business.
Very cool.
Yeah, so we talked a lot about, military stuff and government stuff, obviously, and some people know kind of my experience, but not everyone. But I was pursuing some government work before I ever got into all this real estate nonsense, and so Joey and I just connected on a bunch of different things, and I thought it would be great. He's got veteran perspective. One thing in my mortgage business I'm seeing a lot more of that I really haven't had in previous years is way more veterans saying, hey, actually, I do want to use my VA loan. So I've been having a lot more conversations with veterans lately than I would say over the last few years. It's a very good trend that people are asking those questions. But yeah, so with the financial advising and investments side of it, it's always really hard to get anyone to talk. Can you kind of just cover that from like a super high level, why that is?
Yeah, so that's interesting. And when you get into people and their money, some people are really open to talk about money, and they'll share it with everybody. But most people are pretty, I don't know, trepidatious about talking about money. It's like when you're doing a loan for somebody, you've got to ask some pretty prying questions. You got to get some statements that people are uncomfortable with because you've really just opened the book on. Let's be honest, most people in America suck at money, right? And I say it every day. Money's math, math is science, science is fact. If we can just identify the science associated with money, with investing, with all that stuff, we'll just have a better relationship with it, and we understand it. The only difference, between us and I don't know, a decamillionaire is mindset. It's not because they're making more money or smarter or anything. It's just mindset, and people they don't have that mindset around money. We most of us grew up maybe middle class. Most of us grew up either middle class or with poverty mindset. And I don't know. I grew up. I had a $20 bill in my pocket for mowing a lawn. That was burning a hole in my pocket until I got to the grocery store or to the convenience store to buy me a Reese's peanut butter cup and a soda. Right. I mean, that's the mindset that we have, and that's why people, I think, they don't want to they had a struggle getting out of that mindset. That's my
I
guess.
mowed I mowed grass when I was in junior high and high school too, and I hid money throughout my room that my folks did not know I had. So
I did.
at
I
one
did
point I
not do that.
legitimately had a tin can. I actually
That's
had a
pretty
tin
awesome.
can.
You had a
But
tin can. That's pretty cool.
oh
So
yeah,
your
for sure.
so your
So
deep-seated distrust of any authority figure started when you were a child, I see.
I was born with it for sure.
Yeah. Okay.
Yeah. But what about that aspect though of like, okay, so I'm a mortgage broker. I'm licensed as a loan originator. I have a license. Realtors have a license. Greg has a license. What is it about the financial licensing, like the Series 7 and all that kind of stuff? Why are they not allowed to talk so freely, like marketing wise? Because like Edward Jones, for example, work with someone over there, and they're like, man, I would love to jump on and talk to you guys, but I literally can't.
Right.
So can you just address, like, don't go into too much, but we'd love to know
Sure.
why, so that people know why. Hey, you're not going to just find this advice freely. You need to go seek professionals and like interview them and actually dig in, because really that's how we should too. You shouldn't go to TikTok to find your mortgage information. You should interview people and do it on a one-on-one basis. And so can you kind of just tell why?
So yeah, a lot of the licensing, it's the regulations, right? You've got so many different regulations that were implemented after the Great Depression, the crash of the stock market, then where you've got several major laws that governed investments and investment companies and investment licensure, all the way up to the Secure Act 2.0 that was just passed recently. But that's what it is. It's overregulation, and then you've got. I mean, in the military, my job was in the JAG, and so I was surrounded by lawyers for 20 years, and so I have a good idea of how lawyers think, and it's always on the side of caution. Almost always on the side of caution. And so when you have an OGC, when you work for a company, and I don't care who you work for, they're concerned not only as for their broker dealer license, but they're concerned for your whatever, your Series 6, your 63, your 7, your 66, your 65. They're concerned because you have there's regulation best interest where basically you have to have the customer's best interest in mind, and then there's the fiduciary responsibilities that come with some of the other series, like the 65 and 66. And so they're always wanting to keep your nose clean. I don't want anything to come back and say that you didn't have that specific customer's, their best interest in mind because you said something on a podcast that shows that you don't really care about the customer. All you care about, say, I don't know, commission or something like that. Some silly stuff. But I think that's probably most of the reasons it's around that OGC of that broker dealer, their general counsel's office of that broker dealer, and they're overly cautious. They don't want to be fined by they don't want to get FINRA to come down on them or the SEC to come down on them. That's just it's not good for business. Just recently, a friend of mine posted something on Facebook, and he's got his like 66 license, and immediately Edward Jones came down on him and said, "Hey, you need to take that down immediately." But when he told me what he posted, I'm like, "Are you serious? Why would you do that? It doesn't make sense, you just went too far, right?" And so we do have to be overly cautious, just because we have, it's like I don't know, it'd be like a doctor giving a recommendation on a non-specialty in that they're not a doctor of, and then the hospital coming down on them because they're giving advice outside of their licensure. And that's what you got to be really careful there.
Well, and we speak freely and stuff because we have a ton of regulation and compliance against mortgage. Absolutely, we have a lot, and the title companies, they have a lot as well. Realtors, it feels like, don't have a whole lot of regulation sometimes, even though they do have quite a bit. But who is actually going to come down is the real question. Your side's really tight, our side's really tight, but that's where, again, I love that word fiduciary, because we've all taken tests with that word in it. And look around the market, and are these people truly fiduciaries? If you're a consumer shopping for a service, ask yourself that question. Do they care about getting you the best deal and giving you the best advice? Or do you start to feel like they're saying, why aren't you doing the thing I want you to do? That's something that you should definitely pay attention to.
That's interesting because I see a lot, and I do. I watch some videos on social media platforms, and you see these. A lot of the companies are advertising that you can go do your own investments, right? And you can log into this app, and
Yeah.
you don't have to deal with a person. And I'm like, wait a minute, you've just removed the fiduciary responsibility or the best interest responsibility of that person who helps you with your investments, and now you're picking your own investments. And most people, I mean, you put 20,000 different mutual funds in front of them, they don't know what to pick. They don't
Well,
know the
yeah,
best
they
managed
do,
funds,
because
right?
as long as Tom Cruise is still acting, you pick AMC.
It's interesting though, and then you get into the side, and I told you I was federal government. I was a GS with the federal government, and we would get these emails, and it was clearly and they would be giving advice in the email, and I don't know how they got the federal government email, but you're talking about people are one of, if not the largest 401k in North America is the TSP, right? And so they're trying to get people to use that TSP to invest through them or to retire through them. And when I looked the guy up who sent the email, he's not even investments licensed, so he's not a fiduciary. He doesn't have to wear a BI. He is a life insurance salesman. He's probably trying to sell you an annuity or a product that's really not an investment. It's a life insurance product. And that's the other issue, is that a life insurance agent, there's nothing that says that they have to have your best interest, or they have a fiduciary responsibility to lead you to the correct investment, because they're selling you a life insurance product, like a universal life policy or an annuity. And not all annuities are bad, but I will say that all universal life insurance policies are bad. I have a I don't know, you can call it an iceberg against anything that has a cash value built into it, and that could be a whole life. And this is a very unpopular opinion. However, I genuinely believe that you only buy term and invest the difference. And so a universal life insurance policy has it's a pseudo savings account. They're not allowed to, by law, to call it a savings account, because it's really not your money. Even though you're paying all this extra money into this policy, you're building up a cash value. And then when you die, the insurance company keeps the cash value. So you've paid all this extra money into it, and then they keep it. And they say, well, you can use it as a tax-free retirement. Again, most of these guys that are selling these are not investments licensed, and so it's a life insurance product. And so it's really not an investment. And you're putting this money in, and in order to retire it, you actually have to borrow it back from the insurance company. You're going to pay the insurance company interest on it. Okay. So you're paying interest on the money that you saved up to use for retirement. Makes no sense. And then if you pass away while you have that loan taken out, they actually reduce your death benefit of your life insurance policy in order to pay that loan off on the money that you saved up to have to secure that loan. And that's just one example. And you guys, I don't care. I call it the same turd, just polished differently. Whether it's universal life or whole life or index universal life or index variable universal life, you name it, it's easy to break down. Any good life insurance person can break it down and show you the fees associated with it, and how, like all universal life that I've seen quite a few, are built to implode. So they're built to actually eat themselves away and take away all that cash value that you've saved up.
Greg, you want to chime in?
I have no idea what we're talking about, so
Life
I'm
and
not gonna give an opinion.
well, Greg's in insurance, and so you say life insurance. Let's say we're just in layman's terms, we're just a general consumer that doesn't have any education. Well, you guys are both in insurance. You work for the same company, right? How many times, Greg, do people call you about health insurance?
Never.
So never. I mean, but
Never.
Early on, did people ever get that confused?
Nope.
What about for you? Did they ever get that confused with you, Joey? Like what?
Oh, absolutely.
Types of
Yeah, I got asked this week. Hey, Joey, I know you're in insurance. What kind of insurance do you sell, Greg? What?
Property and casualty.
Okay, P&C. So yeah, just like P&C. Okay, the way I look at life insurance, just like P&C, you're insuring your house in case it gets burnt down by a fire. You can replace it, right? You're insuring your car, so when you do get in an accident, you can replace it or repair it, right? That's the same thing that I teach for life insurance. It's an income replacement tool, right? You're insuring your income, so that because if something, Greg, you're married.
Mm-hmm.
You're married. You got kids?
No kids.
No kids. Okay, so in your case, if something were to happen to you, would your wife be negatively affected financially with the loss of your income?
Probably not.
Probably not. Okay. Okay. Well, and okay, let's go backwards. If something were to happen to your wife, would you be negatively affected financially with the loss of her income?
Yeah, I mean, I understand the basics of life insurance.
Yeah.
We have life insurance in place. It's just when we get
Yeah.
into the nitty-gritty of one versus the other, I keep my opinions out of it.
Okay. Yeah. I mean, I meet with people all the time that are just whole life insurance. They fall in love with this whole life insurance thing, because they teach the thought process is you need life insurance for your whole life. Uh, what I teach is you buy term and invest it different. So you only have to have a life insurance policy until you've built the wealth, until you've replaced it
Mhm.
with wealth. It's a stopgap tool until it's replaced with wealth. And so if you're looking at a term life insurance policy, you identify what that term is, whether it's 20, 25, 30, 35 years, however long it's going to take you to replace that with your savings. Uh, so that's what we teach. We do not teach that you tie these two together to where you have a savings built into the life insurance policy. Does that make sense?
Yeah, no,
Yeah.
yeah.
Okay. Okay.
Yeah, I'll be honest. So, like, he may understand it better than me, but this is a topic that I've never spent a whole lot of time on. It's very complicated for me, and so it's going to be truly 50-50 out there whether people really get it or not. So, if you want to break it down a little bit further, like elementary level, how should someone who doesn't know anything or never even thought about life insurance approach the idea of life insurance? Is that
Well,
a good
and
question?
that's a great question because a lot of people they don't worry about life insurance, but we see it all the time on social media. What happens when I mean one of my great friends growing up about 3 years ago, 6 kids at home, passed away. 6 kids at home, no life insurance. So immediately, what do you see pop up on Facebook? You see a GoFundMe because they can't even afford the $15,000 to put him in the ground, right? And you're leaving 6 kids and a wife at home, and so life insurance really is any financial plan. If you don't already have enough wealth, any financial plan is going to fail if something happens to you unexpectedly. And so most people rely on group life insurance, and group life insurance is what you get at your employer, right? What most people don't know is because it's an education level. They just haven't been educated. Most people don't know that group life insurance only covers you while you're an active employee. So God forbid you're working for whomever. You work for corporate Walmart or Costco or Target. Okay, you're in their accounting department. I'll use my wife. She was with CVS in the corporate accounting department, and she had life insurance through them. If my wife had gotten, maybe she contracted cancer or she needed shoulder surgery. I'll use shoulder surgery because this is an actual example of one of my clients. Um, she goes out to have that shoulder surgery, and so they put her on disability for 2, 3, 4 weeks while she's in recovery because she can't come to work because she's wrapped up in a cast, right? Well, what most people don't know is she's no longer covered by that life insurance because the company's no longer paying those premiums because they've shifted her over to a disability. So she's not life insured. So I met with a client about a year ago, and she looked at me and her eyes got real big, and she goes, "Oh my gosh, Joey, that's exactly what happened to me. Is my dad went out on shoulder surgery, and he was out of work for like 6 weeks. I don't even know how long shoulder surgery takes to recover, but she said he was out for a couple of weeks. He had a massive heart attack and died at 42 or 43 years old. Left a wife and kids at home with no life insurance because the company wasn't paying the premium. And that's what most people rely on. Also, you can look it up. IRS only waives the taxes on the first $50,000 of a group life insurance policy. So say you have a $500,000. I mean, I was with the federal government. I had $585,000 in life insurance. Only for the first 50 grand is non-tax. The other 400 or 535,000 would be, well, what does $535,000 of income do to your taxes that year? It puts you in the top tax bracket, right? So you're up in the 35% tax bracket. So you really don't have $500,000 of life insurance. You're talking significantly less, right? You're down in the 300,000. So most people don't know that. It's just the bad life insurance, and it's surprising that it's legal, the other side, the cash value, but it's education. That's all it is, and all the information's out there.
Yeah, I
It's
mean,
all out there.
I didn't understand that. Probably the only time I don't have life insurance right now as we sit, but the only time I've ever had it is with companies where you're paying like whatever, $1 a month on your premiums they're pulling from your check. So that's the only time I've ever had it. But yeah, this is really interesting because we talk about financial literacy, talk about financial freedom. We do it mostly through real estate as a vehicle. But I just talked to someone this morning before we got on here about their situation, and they've got a couple decisions they're trying to make. It's like not every person is going to turn their old free and clear home into a rental. It doesn't work for everyone. They have different strategies, different needs, different things that they want in life. Maybe they don't want the headache of becoming a landlord. And so with financial, advising, with life insurance, there's all these other things that we never even talk about that I may not even understand are out in the world. And so this is definitely one of them where I haven't spent much time being educated myself. It's an interesting topic. I've had people pitch me before where I've almost signed up for those whole plans like you're talking about because it was pitched to me as an investment vehicle. I could use that, make money. Look at all these returns on this amortization table. That money's yours. You can go and buy real estate with that. So that's my education of that is just a couple different sales pitches I've received.
Yeah, and that's what's crazy is when you put those two, if you line that kind of policy, and that sounds like probably an index variable, IBUL or whatever, or infinite banking is the new name for it. That's all the same. But yeah, it sounds like you probably got pitched a index variable universal life policy. I'm glad you didn't sign up for it. But when you put them together, when you say, okay, well, we can cover you with term for this 30-year, or depending on how old you are, 30, 35-year, 20-year policy, we can, and this is what it's going to cost you to have that life insurance, and then we can do the rest, buy term, invest the difference, do the rest in say a Roth IRA. The Roth IRA, as long as it's properly invested, will always beat it. Always beat it.
Yeah. And they kind of talked about that money being a little bit more liquid than a Roth IRA. Like some IRAs and stuff, investment accounts, I can't touch until I'm whatever year old. So what's the difference with some of those kinds of things? People like to talk about liquid or not liquid. So if I'm a real estate investor and I want to use some of these other vehicles or address some of these other pieces that my financial life or balance sheets might need, what if I do find a really good property and I need 20% down? I can't go get it from a Roth.
You actually can. You can use a Roth, but any financial advisor on the planet is not going to recommend it. So you can pull out anything you've put into it
without like penalty.
Yeah, that's what I'm saying. Anything you put into a Roth, you can pull back out. You just cannot pull out the gains. Any gains without the penalty until you're 59 and a half. That's
so let's say a traditional IRA or something like there's or a 401k. Like that's probably a better example. I should say a 401k, because most people that are buying homes that are trying to get qualified, they're going to go to their 401k for the down payment money, and they got to take a tax hit and some kind of repayment plan. So
so it's
those might not be as liquid as the whole point. So
that's a great explanation. The 401k, most 401ks you can take a loan against, which is the exact same thing you'd be doing with that IUL policy. Is that you've put in all this money and you can take a loan against it. It's essentially using it the same way. Because I don't know about my 401k with TSP, you could always go in and pull out a loan. And unless, just a general purpose loan, you had 5 years to pay it back. All the interest that was charged was actually paid back to you in your 401k. I think that's essentially the same type of vehicle you're talking about in those index universal life or variable life policies, is that you can take a loan out against that policy. The difference is that 401k is actually your money. So if that loan, you're borrowing against it, right? And it's what's called qualified money, and so that should be your ultimate goal in life, right? Is to get as much money into that qualified money for retirement as you can throughout your working years, and so that's why the laws are written to protect that qualified money. And so when you borrow against it, you got to pay it back, but you're paying yourself back. So that, yeah. But yes, I know how they sell it, and about this liquidity and everything else. Just last week, there was a guy who had a IUL policy for 10 years. He's about your age, I think. And so he's been paying on it for 10 years, $500,000 policy. And he had about $21,000 built into it. But it had started because inside the IUL policy is what's called annually renewable term. And so the life insurance inside the policy gets more and more and more expensive. So it's not like a level term policy where it stays the same for the entire term of the policy. It actually gets more expensive. The life insurance built inside of it gets more expensive. And so at some point, you're paying $250 in premium, well, the life insurance costs and the fees cost more than that $250. And so unless you start paying more, it starts bringing that cash value down. So they start taking that cash value to pay for the fees and the life insurance inside the policy. So, yeah.
It's sneaky. It's very interesting because, I'll let Greg kind of chime in and we'll sort of wrap it up here for time. But when we're getting applications for a mortgage, oftentimes people will put down the cash value of their life insurance thinking that it's an asset that they can be qualified with. We get a lot of pension 401ks, all that kind of stuff, which we can work with. You get a lot of annuities as well. And you just got to make sure that you have, like I have a surviving spouse annuity deal right now where it's like, we got to make sure that we can document all that to be able to qualify for the mortgage. And so sometimes that stuff is hard to document because you've had it for 20 years and you don't have the paper anymore. And we may or may not be able to use it, even though you're getting it every year, unless you have that statement they call that award letter. And so, paperwork, documentation, all the different vehicles out there, it is confusing.
It is. Oh, and I didn't actually finish. So he had 21 built into it. So when he went to cancel the policy, they're actually keeping like $5,400. So he's only getting around 15 out of it to put into a real retirement. Yeah, there's so much confusion. I think that's the problem is most people don't read their contract or don't know how to read their contract.
Well, how are you going to read a 100-page document single spaced at 9 font?
And understand it, know what you're looking at. Yeah.
It's tough. Greg, you got anything you want to chime in?
I mean, I say the same thing to clients when they ask about their insurance. I'm like, look, I'd love to go over 80 pages with you of legal talk, but ask the question. We can't just have story time. You got to ask a question. There's no such thing as a dumb question.
Yeah, we can give you the general concept, but like after that, you at some point as a consumer, you are responsible for some due diligence.
Yeah. And I live in the gray area in terms of my responses. It's very much, hey, here's my answer, but this is going to be dependent on an adjuster or the determination of the insurance company. Or I might caveat it with, this is how I understand the wording. Because it is very subjective, and at least in my line of work with PNC, that, okay, we were covered for fire, but they determined that the fire was caused by a cigarette that was left in a trash can, but you stated that you didn't smoke. So is it going to be covered? Well, when you throw that scenario at me, I'm like, I don't know. I don't know if the fire station is going to find the cigarette. I don't know if they're going to determine that you were at fault and it was an intentional act. I can't predict the future, so I try to live in the very much of a, hey, here's what the wording is, and this is how I understand it, but that's really all I can give you.
And it's the same with a mortgage. Yeah, I understand the thing that you want to do. It may or may not be within the rules. There are some gray areas. However, just know that very, very few things actually get through the process. and where an underwriter is not going to find out. So like if you have another house in another state that you're paying on, but it's kind of in your name, but not really in your name because you don't have the mortgage, but you're sort of on the deed or something, it's coming up. We're going to find it. So like it's really hard to lie yourself through these processes. It's hard to trick the system, take one thing for a reason that you're not supposed to. But so it's hard to get through that, but it's also really hard to understand which thing is the right one for you. And that's why we bring people like you on to talk, because there are so many other things out there and you need a team. You need people helping you through that process. There's only so much that ChatGPT is incredible. It can help really break things down, but it doesn't know nuances to your scenario. It can try, but it still isn't perfect. We're not perfect either, but a team can be a Google search, a ChatGPT. Don't let it be TikTok, but you have to kind of put all those things together. And what you offer is much different than what we offer. And you start putting all these members of your team together. Now you might actually have something called financial freedom and feel legit about it.
That's really good. That's really good. I like that. And I think that's why we've met, right? Because the same thing for me as an entrepreneur. I'm always looking to add that other person. I have to have that broker. I have to have that PNC guy. I have to have that real estate broker, because we work together as a team. I was at church on Wednesday and somebody said, "Hey, do you do health insurance?" I said, "No, but I've got a guy. I got a guy that I trust." Right.
There you go. That's
And
different. That's a different statement. I do have someone that I trust and that
that I
I'm
trust.
willing to refer.
That's right.
In my
That's
world, a
exactly
lot of people need credit repair. I can't sit here and tell you that I have a company that I will refer you to credit repair, because the ones I've seen and dealt with in the past, I do not trust.
and it's sad. It's
And
the
that's
same.
everything. I mean, there's plenty of mortgage and realtors that are great. There's so many that I may not choose which ones that I should refer. Maybe I can't refer 20 of them to you. I don't want to overwhelm you, but then there's also another 20 that I may not refer. Or mortgage. Maybe I'm the right deal for somebody. There's some deals that I'm not the right for somebody that I would not even refer me. So yeah, it's a complicated world out there. We like talking to people that have a different angle.
Good. Man, guys, I really appreciate this. Is a lot of fun. I appreciate Greg. It was good to meet you.
Yeah, pleasure.
And I really appreciate the invite. That was a lot of fun.
Yeah, and you do some video online. I was kind of seeing. So if you want to just say your handles and stuff in case one person watches this and needs some help.
Wow, what is it? It's right here.
Or like we'll try to put it in like the notes when I post it to YouTube as well. But what's your best contact information?
So my Instagram is at Joey Carter _777.
Is that because you gamble?
Yeah, are you a gambler?
No, I'm a worship leader in church. So 777 is the perfect number.
Okay.
Yeah.
Well,
yeah.
Even better. Yeah.
Well, you can see where our head went immediately.
I thought maybe we were hitting the slot later.
Yeah, no, not me at all.
Well, we'll gamble a little bit, but we also go to church too, so we'll balance it out.
Okay.
Okay, well, Joey, thanks so much, man. It's been great getting to know you here more, and we're going to do more business together. I took some notes of some things I was going to yell at people. I like to go on rants all the time, but I don't need to today. This was about positive information about learning. So
good, man. It was really good. I enjoyed it.
Yeah, we appreciate your time, Joey. It's a pleasure meeting you.
Yep. You have a great one.
You too.
Thank you.